I think the action is encouraging in that we went from a counter trend rally back to the regular trend, which is large cap and work from home stocks doing well, and then a mixed bag for everything else. So that's like the real trend. The counter trend was furious and fast and moved up a lot, but we had almost every stock rallying at one point early last week. There was a moment, I think it was probably Tuesday, where 45% of the names in the S&P 500 had an RSI, a 14-day RSI of 70 or better. That is the textbook definition of an overbought market. That crashed in like one day. We went back to zero. It's a remarkable speed to have that kind of overbought condition get worked off. And then what happens in the aftermath? Peloton goes back up, Zoom goes back up, Apple, fresh all-time high. You have some other things working, biotech, home builders, but it's back to that regular trend we're in. Everyone rediscovers Shopify again. Why did I ever sell it? And you almost feel like it's a version of Groundhog Day. So that's what I see. On the Bolton stuff, I'll just say this very quickly. If you sold because you think this is the thing, like, oh, they got him now, you know, I really think that that's not historically accurate representation of what ends up happening with the politics. We'll get a couple of days of bad headlines for Trump, and then he'll say something that completely takes everyone away from that story. So if that's your reason for all of a sudden getting bearish, I'm not sure that makes a lot of sense.
Let's look at some of the housing stocks. Home Builder Index getting a boost today after strong data on starts and mortgage applications came out. Diana Olick with the details. Diana.
Yes, Sarah, it was both the construction and the mortgage applications together fueling the gains. Total starts rose just over 4%, but the single-family permits, which are an indicator of future construction and so important to this market right now, they rose 12%. That's what the market is looking for, as the builders are seeing huge demand. And demand we are also seeing in the mortgage data. Applications to buy a home surged to an 11-year high last week. This is the most current indicator of housing demand and the clearest V-shaped recovery in all of housing that we've seen so far. Sarah?
Diana Olick. Diana, thank you. I mean, this has been such a strong run for this group, Josh. Is it too late to buy in?
Yeah. Well, they're not. Most of the names so take the ITB. Like, let's take the 10 biggest names in the group. Most of them are not back above the February highs, and interest rates have plummeted. So mortgage rates that people are locking in are much lower. So if you look at valuation, let's take Lennar, for example, 11 times next year's earnings, not much of a dividend. You're going to get some cyclical growth here that may outpace the growth that you're getting in terms of GDP. Like, the home builders should do well regardless of how much the economy recovers. There are some secular things happening there. The most common age to be in the United States right now is 29 years old. We're getting into another phase of another peak of household formation. Plus, you couple that underbuilt anyway. And I understand this is all regional, but just big picture.
We are just losing Josh's connection there. We'll try and fix that up. Mike, just to round it off on the housing names, I mean, should the low rates and what it does to mortgages be outweighing the unemployment rate?
I wouldn't say it's outweighing, but, you know, basically the pool of potential buyers, as it's relevant to the home builders, has not shrunk that much. What I mean by that is essentially there was such a supply-demand imbalance that the aggregate numbers of homes we're talking about them selling is not enormous. They didn't have to sell a house to every third person in the country. So I do think the mortgage rates matter. I think it's also a favored group, though. So I don't know how much is necessarily left in the stocks of the pure home builders, although the home improvement retailers still seem to have tailwinds.
Let's get to Frank Holland next for a check on what transport stocks are telling investors about the prospects for an economic recovery. Hey, Frank.
Hey there, Wolf. You know, demand for trucking increased 9% last week after spiking 94% last month. With trucks delivering more than 70% of what we all buy in stores, it is an encouraging sign as the economy reopens. The most recent train data, not quite as encouraging, but showing some signs of recovery. Year-over-year declines lessening in the last month. Still, you have to see it's down double digits. Container shipping, which is largely consumer goods, a similar story. Shipments from Asia to the West Coast, where most shipments go to, still declining, but again, showing some signs of a turnaround heading into the third quarter. Back over to you.
Frank, thanks so much for that.